You know what? It's interesting question, because all of last 18 years before I joined here last year, I was helping banks change the core systems, and it is risky. You know, there was an analogy that people used to say it's like changing the engine of Boeing 747 in midair. I mean, that's risky, and most CEOs leave it to the next CEO. But with the advent of technology, the service-oriented architecture, the APIs that is being talked about right now, banks really don't have to take the risk of replacing a core system, because you can really renew it step by step. And essentially what banks now are doing increasingly are extracting the functionality out of core system instead of replacing them, so renewing it by setting up various layers of capability on top. Because at the end of the day, a core system's job is number crunching. It's a general ledger. It's posting is the really core job, and therefore it needs to be robust. It needs to be scalable. But the capabilities that banks need are to deal with a customer, which needs a lot of nimbleness, especially in the change world when customer expectation is such that it's been dealing with Google, Amazon, Facebook, and Apple. It expects that the kind of responsiveness and kind of user interface that I get from those companies, I also expect from a bank. And that doesn't happen in a core system. So banks are setting up layers on top, layers of capability like customer experience engine, like the pricing and billing engine, like the product catalog engine, all as horizontal layers on top. I mean, in some sense, it's a little bit like if you do a little bit of deep thinking, God has given us a very complex machinery, this human body, and the core business, core job of shoulder to wrist is heavy lifting, and that's why we've got one joint here. If you make it two joints, it can't heavy lift. But if you look at the nimbleness and the flexibility from the wrist to fingertips, you'll realize that the core job of this is to actually deal with the external world. So banks are now wanting to deal with the external world with this kind of nimbleness, right? And that's how you do it. So we come in and help the bank set up these horizontal capabilities on top, reduce IT complexity, and deal with them in a far more nimbler manner. Contextual banking is, I mean, you could potentially call it personalized banking as well. Essentially, when a bank deals with a customer, it should be completely aware of the context in which the customer is in. So, for instance, you pick up examples, parallels from the let's say technology world. If I am logged into Google, and if Google is tracking my location, and if I walk into a Starbucks which is around the corner, Google has the capability to send me a discount voucher of 20%, for instance, for a coffee for Starbucks which I'm walking into right then as I step into. So that's contextual rendering, you know, and banks are far behind in this journey. So what they desire is that they're able to deal with the customer in a contextual manner, where every single dialogue, every single moment of truth when you interact with the customer is very contextual to that customer's lifetime situation. So, you know, if for instance, if I'm a high net worth individual and I like, let's say, investing in art, there's little merit in sending me communication of sports and adventure and stuff like that when I have no interest in that at all. So, you know, it's a far more contextualized dialogue if a bank sends me a communication of, for instance, an art exhibition which is coming up in the Tate Gallery, right? And that is what is all about personalization of products and services, in effect, in exactly what we do. Figure out what has been the pattern of interaction of the customer with the bank, what's been the buying behavior, what's his lifestyle, mine not just structured data which is residing in the bank system of his transactions, but also his lifestyle data which is unstructured, which is on Facebook, which is on Twitter, which is on Google. Get all of this together, do analytics on it, and then allow the bank to have a dialogue which is very context aware. That is That is what is personalized banking or contextual banking, as you call it. In the open banking world, every bank would necessarily need to make a choice, a radical choice of being a utility service provider or becoming a full customer owner on the other end of the spectrum. And let me just give an example of both. So on the left side of the spectrum, if a bank decides to become a utility service provider, it will need to necessarily have the best products and services, that it packages it well, but the bank needs to be extremely efficient about delivering those, and so it's largely a cost play. You do brilliant products, you deliver them with great efficiency at low cost, and other banks and other ecosystem players will consume it. Okay, it's pretty much like, think about your ride at Uber. You call an app, you do a ride, and you get out of the cab. At no point in time you've actually thought of a banking or a payment transaction at all, right? You essentially, you wanted to go from point A to point B, and that's all you've done. Where does a bank come in here? Bank is a utility. It's plumbing happening at the back. Just as today there's water coming from the plumbing, and there's electricity and gas coming in from the plumbing. And that's exactly how banks would start happening if they don't own the full customer experience. On the right end of the spectrum, if you take an example, a bank could choose to, for instance, if you want a mortgage, at the end of the day, what is your need? You wanting a new house. You're not bothered about the fact that you need a mortgage, right? That's a hassle. When you want a new house, and I as a bank can understand and map your entire customer journey, it starts with you identifying a property agent. So I could actually tie up with a property agent and give you discount on that deal. You also, by the way, want to do research on what's the kind of school rankings that exist in that locality. So what's the league table looking like? Because you have children who need to go to the school in that locality. You're worried about the crime rate in that locality. So there's another fintech which bank could tie up with, who could give you crime rate, which could give you school data, and so on and so forth, right? All of this. Now, it can go further. The bank could tie up with the insurance, the content and home insurance service provider, and give you that package. All of this is a full customer journey that the bank has mapped, and therefore the bank has become a full customer owner, right? So in the new open banking world, it'll no longer be a competition between banks on basis of products or service. Each bank will desire to own the whole customer experience, and therefore most banks will set up an entire ecosystem of partners. Now, so you'll potentially have a marketplace where there are multiple marketplaces competing with each other. So one ecosystem competing with each other. Now, one ecosystem could be owned by Bank of America, another by HSBC, both competing with each other, but they are also parts of certain service or product provider for the other ecosystem, right? And that will happen. Most banks are talking about it today. And in the bargain, the banks end up giving a full customer experience. Think about, again, a simple parallel. We all know that there are coffee beans available, and let's say in terms of unit price, they sell at 1 cent a kilogram, just a unit. You grind that coffee, and the value goes up to 5 cents a kilogram. That same coffee, ground coffee, is consumed by Dunkin' Donuts, and the Dunkin' Donuts coffee cup is sold at $2 a cup. When you move that to a Starbucks experience, which is a better experience than a Dunkin' Donuts experience, the same coffee is sold at $5. In Dubai, you can today walk into Armani coffee shop, and the coffee cup sells at $12 or $15 a cup, because Armani is giving you that unique customer experience, which banks will strive to do. So the point I'm making is that in this entire spectrum, on the left side is the cost-based game, coffee beans, the ground coffee, etc., etc. And some banks will decide that I'll play this game and play it well. I'll become a part of the off transactions of many other banks. While on the rightmost end of the spectrum, with Armani and the civet cat kind of coffee beans, the experience is unique, and the value that banks will get, the revenues they'll make out of giving that experience is astronomically higher. So most large banks are going to end up doing the right side of things. Basically, aggregate the value that they can deliver by tying up with various other ecosystem players, be it banks or fintechs or a one-man developer shop around the world, but they aggregate the value, aggregate the customer experience, and make the most money out of it. That is what we are seeing as the evolution of open banking. At the moment, though, most of the banks are, so we are in touch with 50 of the top 50 banks in Europe, and most of the dialogue is around that. Understandably so, since 13th January is the compliance deadline for PSD2. Banks are not at the moment setting up the ecosystem. They're setting up the infrastructure to be able to do that eventually. Right now they're focusing on compliance, but I think all of next calendar year we expect the ecosystems to start getting in place.